Today we're going to talk about what is my rate. So it's the number one question that we as mortgage professionals get every time we talk to somebody new or a new family or someone just looking around to purchase a home. Is the first question is, what is your rate? And I think what most people don't know when they ask that question is there is so much that goes into determining what your mortgage rate is that it's just not a quick answer. And sometimes I say, well, what do you want your rate to be? Because the reality is you can really have any rate you want. It's just going to have a different price associated with it depending on your scenario. So I wanted to give you an idea of what goes into pricing out interest rates. So we have here, obviously, what is my rate? But what people don't know is there's over 40 factors, and there's probably actually more, that go into what determines what your interest rate is. And these move daily. So I could say, hey, your rate is X today, but tomorrow it could be something else. Even later today, it could be something different. It could go up or down. So it moves just like the stock market does. So as the market moves up and down, you'll start to see interest rates change, either positive or worse. So just know when we're working with rates, I always try to give a range because I want to say, hey, here's where we've been the last few weeks. Here's what to expect. Because again, they are going to change probably from the time we talk to the time you identify a home or you lock in a rate for your refinance. So some common ones we have here, the most popular, we have loan type. So depending on the type of loan you're getting, if it's conventional, a government loan like an FHA or VA loan, or a jumbo loan, that will have a bearing on where your rate gets priced on each respective rate sheet. And from there, we have obviously your credit score, obviously very important. There's different levels where your credit score the higher it is, the more it helps on your rate. You have your down payment, so obviously the more you put down, traditionally you get the lower rate, but there is some little bit of area where around 80%, between like 80 and 85%, you may see a better interest rate at 85% or 15% down versus 20% down. So sometimes people think, well, I put 20% down, I should get a better rate than if I put 15% down. And that's not always true. So definitely ask me about that if it's part of your scenario. Home type, so if you're buying a condo or a townhome, something that has an HOA or attached walls, a lot of times those type of properties are a little more riskier to lend on because there's an HOA that has a governing authority over your property. So with that being said, mortgage lenders look at that as a riskier scenario and can price in an additional layer of risk, which could make your interest rate higher versus if you just had a single family house, detached dwelling, something of that nature where it's a less risky in the bank's eyes. So something to keep in mind there as well. Over here, we have occupancy. So if you're occupying the home as your primary residence, a second home, vacation home, or investment property, that will have a bearing. Impounds, if you're going to include your property taxes and home insurance in your monthly payment, that can also have an impact on where your rate is. A lot of people don't know that, but most banks and lenders always quote interest rates assuming that you're going to impound both taxes and insurance. And sometimes there may be a hit to the rate or price if you choose not to. But again, something to keep in mind. Last two, we have locked terms, so amount of days that you have your rate locked in for. So 30, 45, 60. The longer your loan is or your rate is locked in, the more expensive or the higher the rate that could be as a result. And last but not least is loan terms. So a different loan terms, you're going to see different interest rates. So like 30-year fix, 20-year fix, 25, 15, 10. Or if you're doing an adjustable rate mortgage, like a 5-year fix or a 10-year fix, you're going to see different interest rates at each one of those. So what I want to just convey is that obviously there's so many things that go into what your interest rate is that it's just not a quick off the cuff of what is your interest rate. So just know that the big thing is that there's a lot of factors that go into what determine your interest rate. And two, the rates do move daily. And three, the reality is if we say, hey, your rate is X, you can go up and down on the interest rate spectrum. And the higher you go up in interest rate from whatever that interest rate is that we talk about, you can go higher and get a credit from the lender to help offset some of your closing costs that helps limit your out-of-pocket expenses. And the reverse is true. If you want to go lower on that rate spectrum, you can, but no, it's going to include additional costs or points. And see my video on points and you'll understand what points are or that additional cost to get that lower rate. So hopefully this answers your question on what is my rate, and I look forward to helping you. Thank you.